the first panel of the day is actually about having a business leader's perspective, a strategic perspective on what we quote unquote are calling as the future of banking. So on my panel today, I have very eminent panelists, and let me invite them in the following order. My first panelist, General Manager for Retail Banking at KIB. Ladies and gentlemen, please put your hands together to welcome Mr. Othman Tawfeqe. Please welcome the CEO of Mawarid Finance, Mr. Rashid Qubaisi. My third panelist for the day is the Chief Growth Officer for KNET. We have a lot to talk to him today on payments. Please welcome on board Mr. Khaled Buabbas. We have with us someone who's actually representing the banking technology world. We have bankers here on the table. We also need to have someone representing the technology world, and we actually have someone who is based in Kuwait and actually been talking a lot about the market here. I would love to welcome the Product Director for Banking Solutions at ITS, Mr. Sherif Elmansy. Thank you, gentlemen, for being here, and I'm looking forward to a very engaged conversation. I think the topic today is, when we're talking about future of banking, it means many things for many people. And I thought maybe we should start with some discussion about what a leader's view is, from the context of how things have moved from a physical into more phygital, as people call, physical and digital. And I'll probably start this question with you, Othman. As the world is moving more towards phygital, what does it actually mean, as someone who's been looking at retail banking over the years? What does it mean for a bank in the way you would visualize, strategize, think about the future?
Okay. Good morning, everyone. Thanks to having me here. It's a pleasure to join that panel, which forward thinking of the future in the banking. صباحكم الله بالخير جميعا وحياكم الله بالpanel. To answer your questions, I think if we go back to the 5, 6, 7 years back, the banking or the sector are thinking that the bank will move fully into digital banking, and the branches will disappear, and all the customers, preparation will be based on mobile applications, and that's not the real situation. Still, the branches is a very key elements. I think balancing between digital channel and physical channel, which is more important, to be closer to the customers is more important. But the things are changing the game now that previously a strategy force the technology. I think the stage now, we need to balance between both digital strategy and digital. I want to get an example of that, how the customers' behavior and customer centricity are changing the game. If we go back, and this is only my personal opinion, don't take it, about KIB vision. Previously, we think that the ATM will be the most important channel, and all the non-financial transaction will be happening on ATM from booking tickets, cinema, or whatever you can do through an ATM. But because the customer behavior more into the ATM is cash transaction and check deposit, maybe some transfer here and there, the bank changing their strategy and reduce a little bit investment on ATM, and what's the capability of the ATM? Now forget about the ITM and the options. I'm talking about ATM investment. So this is just an example that technology is important, but customer centricity, it's driving the strategy and the technology embedded and the needed to invest on it. This is only my point of view on that.
Very, very interesting, Othman. I mean, and I'm reminded our chairman used to say that many years back in the US, even to drive the customer behavior of moving away from tellers to the ATMs, they actually had raffles that was offered. If you had to draw from the ATM, then you'll actually get people had to be incentivized to actually make that behavioral shift, right? But actually, you're making a very pertinent point. Technology is no longer just the enabler, but you have to keep it right in the middle of any strategy that you're looking to draw. And but it's also important to keep the customer in mind, and that's exactly something that I'm going to take as a question to you, Rashid. You've actually been an advocate of customer experience, driving, making sure that the customer is right at front and middle of everything that you do, and you've actually been a customer service specialist for many, many years. I mean, in all your career. And I think this discussion that I'm going to have about is a banking strategy today, is it, in your view, is it really about customer insights that you're actually looking to drive? Is technology about getting to know your customer more? Is it about customer insights? Or is it actually about getting to service the customer more? I mean, where do you see this, the focus on, when I say customer, what does that really mean as a banker?
Thank you, Ram, first of all, and I'd like to welcome everybody to this wonderful event. I'm happy to be here in Kuwait, and I would love to share some of my experience coming from UAE and what's happening at the maybe other side of Kuwait. I look at the whole experience as a journey to our customers, but still at the end of the day, we are a bank. And we want to make sure that as a bank, we still have the pillars of a bank at all of the times. But the bank is meant actually to serve customers. And you can understand that those customers, their expectations keep changing as the technology evolve, as the new maybe services get introduced in the market, as the whole surrounding around us is keep changing. So as a bank, we need to make sure that we are keeping up with this. So end of the day, as a bank, still we need to meet the customer's expectations. So we need to make sure that their expectations is well addressed. They need to compare it to what's been offered in the market at the best. I remember just going maybe to what maybe Othman said here. We looked at the ATMs, how to move the customers. But before that, I think there was one step before that where we're trying to how to introduce queue systems, where the customers actually can go to deposit money at much faster pace, where we need to introduce queuematic systems. Now at this stage, we are looking how the customers still can do their banking, with the most convenient ways. So I think it's a journey. We're going to continue doing this. We don't know what the technology can come up down the road. Is it going to be linked to the AI? Are we going to have, instead of, as maybe quoting Othman here, are we going to still have branches? Maybe yes, but maybe you'll not see a normal human behind the counter. Maybe you'll see a robot to serve. But I think those are some of the things we might see. But for us, I think as a human, still, we want to make sure that we are, if we are a customer, being treated the way that we feel like to be treated. So if there is a branch we need to go to, we need to see the technology reflected there. If it's over the mobiles, I think we need to see that happening for us also as well. I think that's my views on this.
Well, I mean, maybe one of these days we'll have robos on this panel and we'll have...
Yeah, maybe.
But no, thank you, Rashid. I think you're resonating the fact that the challenge that bankers have, independent of which country you are in, are similar, and some of these are actually manifesting in more ways than one, right? Qmatic is a great example. I mean, we still remember the days when we actually still had to stand in a queue to get this. Yeah. I don't know when we went to a branch last, but I agree. I think end of the day we still have to deal with some of these old challenges as we embrace the new factors. But I still go back to this ATM comment that you, Othman, made, and I'm going to take that to you, Khaled. We are seeing a lot of, supposedly, and you should validate if I'm right, a lot of shift that's happening from an ATM dominance in the market to what could be more contactless or e-commerce driven payments, right? And we see that happening a lot. Obviously, you have been a backbone in all that shift that's happening in the country as well as in the organization you represent. I recognize that the comments being made by the panelists here are their personal comments. It's not reflecting the institution. I think disclaimer for every panel today. But I still want to ask you, Khaled, and as business leaders, what lessons do you think we should learn in the way this shift is happening, and therefore what should we keep in mind as we look at the future?
First, thank you, Ram, giving us this chance to speak in this panelist, and thank everyone for attending here and having us here, and thank you all the panelists here. Going back 20 years ago and see the shift from cash to digital to electronic payments. 20 years ago, we have about 60% of our payments in Kuwait, or around 60 to 70% ATMs transaction. Now, after 20 years, it's no more than 5%. So what drives this shift? Is it the technology or the customer behavior? I would say technology will introduce the service. The customer behavior will drive the technology to evolve to serve the customer expectation. So why customer used to have cash and go to the ATM and now go to digital, e-com, or point of sale? For two reasons. First, the technology itself much more advanced now to offer a seamless experience to the customer to do any payments. And also the devices or the technology become more advanced and more secure and even cost effective. Earlier, to have a point of sale machine and a shop, it is expensive. Infrastructure will not allow you everywhere that can accommodate a point of sale, or later on the e-com. So it was much easier for the customer or for the market to go to the ATM and just withdraw money and pay by cash. So I would say technology will introduce the service, but the customer behavior will force the technology to evolve to give the best customer experience. This is the way you will allow the service to penetrate the market. I'll give an example of the tokenization we mentioned earlier. In 2015 and 16, there was the wearables that you can do a payment using your wearable, either a watch or a keychain. But the experience was offered to the customer. He need to go to the branch. He need to register. He need to get one wearable device and pay with it. So the onboarding process was not seamless, was not for the best convenience of the customer. That's why since 2015, we don't see penetration for this technology. The technology was there. Technology of tokenization, technology of wearable payment was there, but did not meet the customer expectation and giving him the best experience. So did not adapt to the market. So he still use point of sale, normal card, contact or contactless. When the technology evolved based on the customer behavior and we introduced the Apple Pay, Samsung Pay, X-Pay. The experience of onboarding, very seamless. You just go to your mobile, add the card, in a minute you're all set. You do the payment fast, accepted everywhere. Then we can see market penetration more than almost to 50% of our transaction now it's X-Pay. So I would say technology, what we learned that technology will introduce the service. However, it should evolve to meet the customer expectation, to give him the best experience. So
that's a fascinating answer, to be honest. I mean, what you're saying, Khaled, is a technology that is either ahead of its time or behind the times will not succeed. So you have to be clear that the technology is addressing a very clearly identified customer need, and the customer need eventually propels the adoption and the use of technology. And the examples you gave both on tokenization and the wearables was a fascinating example.
I'll add to this. Also, you need to have the proper infrastructure, because even if the technology and the experience is seamless, if you don't have the proper infrastructure, the secure and the availability, also the same thing.
Correct.
The customer expectation to do a seamless transaction, not only onboarding a process. So you should have a proper infrastructure that serve both secure, and availability. So having all this together, giving the customer the best experience, you will drive. So what drives the technology is the customer behavior, but technology will introduce where's the service.
Yeah. I think that's a very interesting way of looking at it. Technology is sitting there, but ultimately it has to drive what customer needs are, and the infrastructure has to be in place to deliver that. And that takes me the question to you, Sherif. You know, technology players have been there for a long time. Customer needs are evolving. Therefore, the bank's orientation to what they should deliver to their customers is also evolving. Do you think technology players are adapting to this change in the way the change that needs to be delivered to your customers, which are banks, in order to serve their customers, which is the end user, the customer who is ultimately getting the benefit of? Is that change happening seamlessly, or you have a point of view on this?
First of all, thank you for attending this event, and thank you for having me here. Actually, yes, it's happening seamlessly. Currently, all technology providers are fundamentally re-engineering all their platforms toward shifting priorities of banking customers or banking themselves toward agility, customer centricity, scalability. All of this is affecting the technology providers to change platforms to adapt for these priorities in demand. So first, as a technology providers, we focus on API first and modularity. This will enable the customers to make integration with third parties and to offer services for their customers seamlessly. This will let them acquire new customers easily. And of course, this will enable them to comply with the regulations and ESG. In addition, also as a technology provider, we always we shift our applications toward cloud native and microservices. This will allow, of course, easy scalability for the bank, and of course, they can make multiple changes and deployment faster. And this will allow, currently also there is a lot of technology provider provide a containerized service that can be deployed into a hybrid or cloud native or public private clouds. Also currently we are focusing as a technology providers on intelligence and analytic in our platforms. You know now artificial intelligence and machine learning becomes no option. We have to comply with this. Most of the customers are requiring this. It helps in decision making, fraud detection. There is lots of use cases for artificial intelligence we see now in the market. Also regulatory compliance and ESG compliance is also one of the things that needs to be available in any platforms. Now we can see that there is growth of demand for our customers for these requirements. So currently, we as a technology provider, we are not a traditional core banking system provider for our customers. We have to be their partner in innovation, in driving the future, to, as our colleague said here, to be able to make the technology serve the customer needs. Okay, we need to adapt frequently. We need to adapt very fast in order to do that. Currently, also, fintech and ecosystems is no option. Also, we have to comply with it. An API and open banking is very, very important for customers. This will allow us to innovate and provide faster time to market services for our clients and financial institutions. That's from my point of view.
That was a real comprehensive answer there, Sherif. I think Sherif ticked every box of what we're going to have in every panel discussion today. Yeah. It was fascinating. Thank you, Sherif. We all talked about technology, and there was a lot of talk about customer, and we talked about innovation and banks needing to be adaptive. But Othman, I'm going back to something which is more fundamental. Sherif just made a comment saying that, knowing AI is no longer an option. That is a nice statement to be made, by a technology solution provider. But as banks, how do we actually invest in the skill sets that we need to have? What do we do to actually make sure our people are ready to embrace the future that is arriving very soon?
Before answering Sherif or commenting on what Mr. Sherif has mentioned, let's go back one step back. We, our organization, are looking for profit. And referring back to your two-slide presentation, shareholder or fees and commission, we need to increase it, and there is an opportunity. So this is the aim that, from strategic point of view, that the bank are looking for. Now, how utilize and get the benefits and outcome from customer centricity or technology to reach to that goal. Let's agree on that, okay? Clear.
100%. That's a very powerful statement, and I think we can't forget the fact that while serving the customer, we can't forget the shareholder.
Exactly. So now, to continue what I want to talking about, to give more real case answer for the audience to get the benefits more than a theory and the general statement. The bank need to look, previously the bank providing regular product and service, which is finance, deposit, credit card for the customers. Now, by utilizing the technology, I was talking about KIB, we need to cover the life cycle of the customers and try to find fees and commission that we can increase it from here and there to maximize our profit. For example, on that, I will not talk about retail mobile app or corporate. We are creating a marketplace, which is Paytali, which is the customer can go and shopping through there, and we can make money out of the discount that we get it from the merchant itself. We are creating a healthcare application, Salamtic, in cooperation with a top healthcare company, Mazaya, in Kuwait. So we are covering a Mubadir, which is entrepreneur applications. So all of that digital enabler and partnership with fintech and with the company, first of all, to cover the customer need. Secondly, to make the transaction seamless for the customers. Third thing, which is most important, to make money and increase our fees and commission and return on investment for our stakeholder. So now refer back to Sherif, utilizing or try to find the best way of adopting the technology to maximize the profit. Now, maximizing the profit will be either by reducing cost, by efficiency, or by serve the customer problem, which is increasing the customer centricity and making more money and stickiness of the customer. This is, I mean, my point of view on that.
And what about getting people ready? I mean, do you see the skill sets that are required to deal with the future is something that we...
Yeah, see, now with AI, with ChatGPT, let's agree that there is some job will be not exist, but there is a new job will be created, okay? And so how to search an AI, how to develop AI, I mean, all this kind of job will be created. We now, I would talk about my personal experience or my personal point of view on that. My dependency on secretary in the last 6 months is maybe, I don't want to see zero, it's 10%. Okay, in translating memos and preparing memos and sending email. I mean, I mainly use her maybe just to answering the phone. And if I have now any application, I can integrate it with a bank landline system. From tomorrow, I can stay without a secretary. So this is only take it from personal point of view. I don't want to reach to MIS analysis. I mean, we are talking about now replacing staff in the branches with the AI robotic staff. So we need to move with that technology. It's not the way that we're accepting or no. It's increasing efficiency. It's giving the right advice for the customer. We will stop staff mistake or errors. Standardizing of the service will be high. I give you example by analysis the data that maybe I did it last month in the bank. I noticed that any customer with no mobile banking applications have one product. And any customers who have mobile applications is 2+. So cross-sell per physical channel and digital, it's clearly. Secondly, the customer who's leaving the bank percentage are more than the customer who don't have a mobile applications.
Interesting.
Because they are dependent on the staff experience, mistake is happening, delay is happening. But if you go to mobile applications, more standardized and personalized service. So if you can take the same technology and embed it in the branches with a different layout, I think the service will be, I mean, much higher, and the customer centricity or customer satisfaction will be much more.
It's a very interesting, extremely interesting perspective there, Othman. I mean, what you're saying here is that if you could invest your energy in ensuring your customers become your digital banking channel customers, correct, then A, your likelihood of cross-selling is much higher. B, the chances of retaining the customer is much higher.
100%.
And the underlying reality is that is happening not because the customer is actually choosing that way. It's because the experience that is being offered and the efficiency offered is much higher. That's a very, very fascinating takeaway for our audience here, and thanks for that, Othman. But I'll actually take another perspective to you, Rashid. And this is, just Othman just talked about a lot of initiatives that are happening, in the banks, and every bank, every institution is in a constant mode of change. Either the underlying platform or the technology or digitization, you name it, right? As a leader, as a CEO, how do you see the balance between making sure that change happens, but ensuring that you aren't getting off track with your agenda, which means that you actually have to de-risk the transformation program from moving fast. You still need to move fast, but you still have to ensure that the change is not impacting what your agenda is. And Othman nicely pointed out that my agenda here is to ultimately do business. I'm here to do my business, right? Not to just run a technology program. So how, as a CEO, do you see that balance happening, and what are the experience you would like to share?
Being a CEO, I think it's a tough job, just to create the value for the shareholders. And the value of the shareholders will come only by having the customers. And we know that we don't have the perfect customer. I think we need to agree on this. We would love to go out one day and we do business only with the perfect customers. That means they are well educated, they know how to use the AI, they are well into the apps. Okay? But the real life, it doesn't go like this. So when we look at the customers, we need to understand, their preferences, and based on that, we give them the right solution. Now, and that takes time, because you need to make sure that we approach the right customers with the right solution at the right time. I'll just maybe bring a good example. Like in UAE, we have some of the new banks which are digital, and they talk about the number of the customers they have. Some of them, I would know, like they're already touching more than 150,000 customers, but they're only giving them specific product that may be linked to remittances. But they cannot give them personal finance, they cannot give them auto finance, because the experience around that, still they did not reach the ultimate, the best perfect way where they can bring them on board to suit their offering as a digital bank. Till that time, those customers, they're going to go to the banks who are meeting their requirement, meeting their preference. So if I'm buying a car, I'd like to go maybe to a branch that dealing with a dealership I can negotiate with them the offer or the profit rate or the interest rate. So for me as a customer, if I put myself in his shoes, I would like to choose the right offering, maybe the right channel of communication, and maybe the right time when should I go to meet them. And yes, we can see that through the digital approaches, we can request for so many things. I think maybe doing the remittance, we can do it 24/7. But when it comes to requesting for a loan to buy a car or a personal finance, it's not something that I can request on the spot. I still need to go to a branch. I still need to go to talk to the call center. I still need to send a request, either if it's through the app or it's through the branch or any of the available channels. So I think we need to still maintain that relationship going forward. That's very important to cater to those customers. As I said at the beginning, we do not have the perfect customers. On one side, we're talking about AI, digital transformation, but we're talking about a normal human being who is a customer. Some of them, they're very much advanced on the awareness of the technology, but so many of them, they are not into it. They are not into the apps. They are not into the technology. So still we need to cater to those, and they are also reflect on what kind of value we can give to our shareholders at the end of the day. If I want to discuss, take one niche of customers who are high net worth customers, I would say so many of us will say those are not into the apps. They need to talk to somebody face to face. They need to talk to somebody over the phone, but they're not willing to go and put their money on the app. I think we need to always keep in mind our customers, they are not perfect customers. We just need to meet their expectations. We need to meet their requirement at the times that they need. And sometimes we need to go off the way. We need to go off our concept approach here when we talk about the digital approach, AI approach, the new banks, the future of the banks. So I think that's very important to look at. And this is going to be with us in the next, I think, I will not say even like in the next near future, but this will be still with us as you move forward. We need to have this parallel approach to our customers where they still feel they're comfortable to use all of the means that we have to interact with them.
There is no perfect customer. What a critical takeaway from this conversation, Rashid. Yeah. There is no perfect customer.
Just to comment on Mr. Rashid, I think the clear segment that you are targeting will identify the rest of the issues. So if you are targeting, let's say, teenagers is different than 20 years old or 40 years old. So identifying the right customer that you want to reach will drive the rest of the information, regardless if they are preferring technology adaptation or prepare physical.
No, very well said, Othman. Ultimately, as they say, it's not one size fits all. You define who's your customer and then make sure your products are built towards that. And that is my question to you, Khaled. I think this is, payments is evolving, experiences are evolving, and obviously banks are looking to deliver, what those quote unquote expectations of customers across different segments, as Rashid says. The not so perfect customer, but you obviously have to deal with, what expectations cut across different segments. So my question to you, Khaled, is how can banks and players, payment players specifically, target what you call as the new evolving customer segments?
Okay. I agree with Mr. Othman, what we have said. We need first to understand what is our target customer segment. Each segment will have a need or a preference. So the solution that we will provide to this segment should fit his expectation. So maybe this product will fit this segment, but is not used for the other segment. It's not solving a problem of the other segment. So first we need to identify our customer segment. So we have two customers. We have the merchant who offer the payment device for the acceptance, and we have the customer, which is use the payment instrument to do a payment. So in the payment domain, we need to understand each customer, and within this customer, like either the card holder or the merchant, different segmentation. What's the need of each segment? I'll give an example. Back in 2015 or 16, there was a product, an Amboza product, that we need to introduce to the market. It was very successful and have very high penetration rate in other regions. Why? Because at that regions, they don't have a proper infrastructure of landlines and IBs. So they depend on the SIM cards. So they depend, and the internet and the landline is very expensive. So they would use the Amboza device as using their mobile communication and SIM card to do a payment by connecting another device as a PIN pad or a keypad to the mobile to do a payment. So this technology served a need for a segment as a merchant in one region. In Kuwait, communication is not expensive, infrastructure is there. So when we introduced this service, we did not find any market penetration for this device. We have a lesson learned. We need to understand the merchant segment and their needs. So if you analyze and understand the targeted segment needs, then you give him the right product, because it's not one product fit all. That's from merchant type or merchant side. From card holder, I'll give another example. We had a bill payment through the ATMs. We have introduced this in 2014. We launched the service only for 6 months. Then we stopped it. What we have seen, that we have two segments, main segment, either new generation, they prefer to go online and do the bill payment. He will not walk to the ATM and do a bill payment. And we have the older generation, they will just walk into the branch and pay there. So we end up, nobody is using the ATM to do a bill payment. So we need to understand also the card holder or the user of the payment instrument behaviors and segments. So when we introduce a service, will it fit their needs or not? So by understanding each segment, I will not say there is no perfect customer, but we need to understand his need for each segment, so we introduce the proper product that fit his needs.
We need to have a perfect product. even if it was not a perfect customer. So you need to have the right
yes, of
product
course.
for the right
Of
customer.
course.
Yeah.
So we'll go back. If this product will not meet his expectation in terms
Yeah.
of user experience, the value added to the service, and of course security and availability, then we will lose.
Well, I mean, we do a lot of work using the balance scorecard. I'm just reminded that, ultimately to deliver financial expectations of the shareholder, you have to meet with what you call as the right customer segment and the products that deliver the customer expectations. And you need to have the right processes that supports it, enabled by technology, right? And they all link with each other. I think that's the whole context here. And if I take this, therefore, the technology aspect, right? So we're talking about future proofing here, right? I mean, we're talking about making sure that you aren't surprised by something that future is asking of you that you aren't ready with, right? So what capabilities do you think as a platform, as technology platforms, do banks need to be focusing on that allows them to actually be insured, protected, insulated from quote unquote a future shock?
Yeah, as I can hear and as my colleague said that we need to have a product that fits the each customer segment, and also there is no perfect customer. So this put pressure on technology providers to try to provide a comprehensive platform for the business team in order to be able to create products and services that will cater for different customer segmentation and also a different customer behavior. So I do believe that where banks will requires first composability and modular architecture. This will allow them to plug in, plug out applications and modules very easily, and will also foster innovation. Second is real-time processing and data stream. This is very important because this will allow all current customers now needs a real-time of their interaction with the bank. Like, for example, when you do a transaction in an ATM, you instantly will have a message say that your account has been debited and you have this balance. Also, from regulatory point of view, they need to have this real-time because monitoring this transaction is very important. Second is also an end-to-end digital journey. You need to have an end-to-end digital journey, and all the application, and they need the capability to be able to have an omni-channel. You start anywhere, end anywhere. This is also very important for them. This will allow banks to provide services for all kind of customers, the tech-savvy customer, all the traditional customer who are going to the branch. In addition, also, we can say that cloud and scalability is also very important. This will allow banks to deploy faster applications and be able to target customers at any place trying to use their platform. In addition to, of course, compliance with regulatory, they need to have a platform that allow them to comply with regulations and security. This is of utmost priority. And of course, one of the main things is intelligence and data analytic. This is also very important because this is actually the source of analyzing what happened in order for them to be able to create new products and services that will, at the end, generate profits and address the needs for...
Be modular, ensure you are actually delivering the end-to-end journey across all customer segments, ensure you're compliant, be scalable, be cloud ready, have the right analytical framework. I think all of them are very valid comments there, Sherif. Thank you. I'm going to quickly open up for questions to the audience, and before I did that, I would love to have maybe a rapid fire, which is like a 1-minute question, the same question to all my panelists here today, right? We talked about a lot about technology, we talked about customers, we talked about innovation. Let me ask a very fundamental question. As business leaders, what kind of shift should a bank really do to really be future ready? It could be strategic, it could be cultural, it could be structural. And I'll start with you, Othman. I'll go with everyone. Same question to everybody. What shift should banks focus on to be future ready?
Okay. I think, first of all, leadership mindset change.
Brilliant.
And the acceptance, the change and the technology adaptation. This is one thing important. Secondly, I think the traditional bank need to change the structure and segregate between digital arm and physical arm so to keep focus, because the way that fintech is operating is important. So I think the banks need to divide it into two half digital corporate retail banking, and half of it, which is fintech operating model, which give us more flexibility and less restriction on the bank to operate. This is, I think, the two important decisions the shareholder need to take to sustain the profitability or the growth that banking sectors have that you presented previously.
Thank you, Othman. Rashid.
Yeah, I think from my side, we need to make sure that, within any organization, we have people, and it's very important that they start having the tools, the know-how, how they can adapt to the changes around them. That's very important to see where are the opportunities to capture the technology that's been enforced on all of us going forward. By doing that, that means we should have, or to make sure that our human resources within the organization, they get well-trained, have the right information, the right knowledge to keep up with what's happening around them. If you have the right team within the organization, I think this will make you go through any challenges that you might face down the road. That's, I think, one of the main things that we need to do, because we can hear here like some of the technology that's been presented 20 years ago, it's not here. 10 years ago also, it's not here. 5 years ago, it's not here. So what we're going to have here now today is something that's going to continue with us going forward. Maybe not, but for us, I think we are still here. So it's very important for us that we should be able to cope with what we anticipate to happen down the road. I think that's my...
Invest in people and be ready to accept change. Very thoughts of wisdom there. Thank you again, Rashid. Khaled, your views.
I think we should focus now. We have moved from commodity, cash, product, card, X-Base, experience. I think we should focus on enhancing experience of the customer. So we are not anymore should sell a product. We sell experience. Customer now, especially new generation, looking for the experience, not looking for the product. That's one thing. Another thing, I think banks should partner with fintechs. Fintechs can drive this experience and offer it to the customer. And financial institutions should be the backbone, the infrastructure. Front of the customer should be with the fintechs, partnering with the fintechs to offer understanding those customers, offer this new experience, plus speed to the market. Now, technology evolved very fast. So, having now introduced a new service with a project 3 years, after I introduce the service, it's an old technology. So, speed to the market, experience, partner with fintechs.
Brilliant. So you're not selling products anymore, you're selling experiences. And if you have to deliver experiences, then fintech partnerships are key. And in the takeaway there is you're first in the market, which means speed to market is a very important aspect. Thank you, Khaled. Sherif.
From a technology company that support the business and the financial institutions, we think that we need to focus on the next generation consulting, okay, or consultants. In traditional days, always banks make complaint about consultants coming to the bank. We listen to what the bank needs, and then we do what the bank needs. No, it shouldn't be like this anymore. We should be proactive. We should be shaking hand with the banks. We should come to them and tell them, listen, there is a new trend coming here. Together, we are going to offer this product and service. So I think the next generation for technology companies that are working with banks is be proactive and focus on adapting to technology and generate more use cases that will enable the financial institutions to provide better service to their customers.
Which goes back to what Khaled was saying. I mean, if banks have to deliver great service and experiences, then fintech partnerships are critical, and fintechs have to be thinking about what the next gen ways of solving the problems are. Very well said, Sherif. Thank you. I must say that this panel set the tone for a very interesting day ahead. I think we do have a few other panels coming up after this, but I think we covered a number of topics. And if I just quickly summarize the last session, the last questions that were answered, we're talking about leadership mind shift. We're talking about getting traditional and digital coexisting. Investing in people and the change with the tools and the know-how, and getting people trained. Moving from commodities into experiences and driving fintech partnerships, and fintech partners actually solving for the new age solutions and next gen solutions. I think that was a brilliant perspective sharing by the panel. Ladies and gentlemen, please put your hands together to thank this panel for a wonderful session.